Well, obviously everyone in Europe's had a chance to react to the big reversal that we saw coming through in markets, and that flowed through into the US session, and it certainly flowed through here into Asia. And everyone's talking about the fact that everyone's rejected this idea that Donald Trump's going to throw himself at the Federal Reserve. In fact, we've seen one of his advisors saying today that he's not going to sack Janet Yellen. The market wasn't particularly concerned in the US about Donald Trump's relationship with emerging markets, despite him potentially putting a 45% tariff on Chinese goods. In fact, everyone said, but if they do that, we're actually going to see prices going up in the US, which of course is inflationary. If you mix that in with a massive tax cuts to get the corporate tax rate to 15%, you mix that with a dollar repatriation window that's coming through, plus a potential 500 billion to 2 trillion infrastructure project, and there where you get growth in the US, and of course you get inflation. And we saw a massive move in the bond market in the US trade. It was up 35 basis points from the low, and of course that pushed up dollar yen. It pushed up markets on the belief that Donald Trump will try and create some growth in the US markets, and he'll get them through Congress because he has a clean sweep there in terms of the Republican Party. What we've actually seen through today in Asia is that flow-through effect. The ASX 200 is up over 3%. We've seen absolutely staggering gains in the mining space. BHP at one stage was up over 10%. Some of the smaller players like Fortescue having double-digit moves as well. A bit of selling coming into the back end of the day, but certainly the mining sector doing very well. The banks here have been very, very positive, as they were in the US as well. And that sector we still like at the moment. But certainly banks in Australia looking very, very good. In fact, anything that has yield-like qualities, anything that trades like a bond, such as the REIT space, the utilities and staples, and to a degree the telcos as well, anyone that has bought them for their income has been sold. Those equities have been sold on the idea that you get a much more compelling yield in the bond market as opposed to the earnings yield in the equity market. Certainly those sectors have been offered, where you've seen good buying in banks and materials here in Asia. The Japanese market's up nearly 6%, obviously a reaction to dollar yen. But as we've gone into the day, we've actually seen good buying coming through in the US Treasury futures market. And that suggests that dollar yen has fallen a little bit on the back of that. So a bit of heat has come out of the Asian market because US Treasuries have started being bid again. So I think that's really the asset that you want to be looking for. What is the US Treasury market saying? If we see good buying down there, it's going to suggest that people aren't seeing those sort of growth potential that we had seen before. A further sell-off from an extension of what we saw overnight in US trade, then I think probably equities will rally as well. So I think there'll be a correlation between higher yields in the bond market and higher equity prices from here.